Hey, Carl, thanks very much. Yeah, here in Jackson Hole with a person we've had on quite a bit. In fact, Carl just refers to you as Mester. Not President Mester, not Loretta,
hey,
Mester. You're just Mester to us.
I'll answer to that.
Well, it's a sign of respect, I think. Loretta Mester, the Cleveland Fed president. Let me ask you this, I guess we talked back in the spring or something like that, and how much has your view changed in terms of the outlook? As I recall, you had 2 hikes built in. Still 2?
So the June SEP, which of course is
Summary of Economic Projections,
I had built in 2. Of course, we've done one of them.
Hold on one second, President Mester. It looks like Fed Chair Jay Powell's taking a walk with Christine Lagarde and the new bank president, I believe, of Japan, right there, whose name escapes me. I don't know if you guys can look it up in the back. I knew it, but forgot it. But there's Jay Powell with Lagarde, and maybe it's an opportunity to talk about what's happening in Europe, too, which is they're sort of in a no-forward guidance coming to the end. Everybody's coming to the end of the rate hikes now, Loretta.
Well, we're nearing, we've talked about this before, getting close to where we need to be. But I think we still have, as Chair Powell said in his remarks this morning, we have to be very diligent about this. We've come a long way, but, we don't want to be satisfied because inflation remains too high. And we need to see more evidence to be assured that it's coming down in a sustainable way and in a timely way.
Right. What is it, when you think about what's happening overseas in terms of Japan kind of ending yield curve control, does all that help us a little bit?
Well, I mean, it just shows that,
there?
We've had common shocks, right? The pandemic, right, affected all economies. Different economies were different places to start. And what we're seeing is, and various countries took various actions. Japan is different because they were in a very, very low disinflationary, deflationary regime. So they started at a different place than some of the other countries. When we started our prior to the pandemic, we were basically at price stability. And so, what we did in our country was going to be different than some of the other countries.
So let's talk about that second hike that you were talking about. Is it still on the table?
So the way I look at it is think about what's changed in the economy since I wrote down those June projections. So we've had, I think, stronger underlying momentum in the economy. I think the growth rates have come in stronger. We've certainly made a lot of progress on inflation, but again, it's that underlying inflation rate which remains. Chair Powell talked about core inflation being around a little bit over 4%. That's still too high. So we probably have some more work to do. And I don't see that much that has changed in terms of my own outlook. What I think is very important is that we be diligent now. We have to be very careful. We don't want to over-tighten. We don't want to undershoot. And so it's that balancing. It's all about risk management now. And we are in a restrictive policy stance. And then it's the question of, do we need to move higher? And then the second question is, how long do we need to have restrictive policy before we're assured that inflation is moving back down to our 2% goal?
Did you have cuts built into your outlook for next year?
No, I didn't in June. But again, I'm going to reevaluate things as we get more data.
I'm just gesturing over to Fed Chair Jay Powell, inviting him to join us. But he declined that invitation. Maybe next time. But let's talk about, did you have cuts built in June?
Yeah. I did not have cuts built in for next year. But we're going to look at all the data. There's data coming in. We've got to evaluate that. And then we'll have to see where things are. As inflation moves back down, of course, real interest rates, even if we hold the nominal rate constant, move up. And so we have to balance that again to make sure that we are setting policy in order to get inflation down, but also not over-tightening. And that's going to be the discussion later. I think right now the discussion is, are policy rates in a restrictive enough territory to make sure that we can reliably have inflation move down to 2%?